Hi everybody, it's S.A Ghafari and welcome to my webinar. Um, Today we're going to talk about a very important subject, which is actually uh, picking and identifying the right trading signals among many trading signals that looks fantastic every day or every week. It depends on the style that you trade. Well, um, in this session, I will focus on the techniques that a trader, and especially a short-term trader, should know about and also should apply them in his or her trading. Well, okay, first I want to explain a little bit about the nature of the trading signal. Well, as you may know, and I'm sure you know, we have many um, actually, we have first, I want to explain a little bit about the nature of the trading signals, all trading signals, not particular and specific ones. And you got to always remember this lesson because this is very important if you want to actually make some money at the end of the year. Okay, it's very easy, it's very easy to make profit in one or couple of trades, but to be still profitable at the end of the year, you have to consider some very important rules and issues that actually determine the winner or the loser. Well, um, there are many actually exciting moments in our daily trading life that gives us the feeling that well everything looks all right and here and this is exactly where we must get in the market any better than this and such feelings that we may go through it very easily and every day. You know why? This is because we are often too sure when we have, for example, two or three indicators or price patterns. uh, Let me just go to the chart. Okay. Uh, Uh, I was saying that this is because you're too sure when we have two or three indicators or price patterns pointing to some actually the same direction in the market. Uh, you're not going to be that kind of sure, and you can be sure because nobody can actually predict the market, and nobody knows actually what's going to happen next. Well, uh, you know, we have to understand that all trading signals are actually based on some kind of possibilities. And there is no 100% in these kind of markets because it's all about, you know, possibilities. And this is why we should actually put stop losses when we trade. Yeah. Okay, I'll try it out. Well, let me see. Where will we be? Okay. I was just saying, all trading signals are talking about possibilities, and this is why we actually put stop losses when we trade. And even a trading strategy or a trading system with a brilliant past performance can actually very easily fail today or tomorrow. And so there is no guarantee on any actually trading signal. Well, I'm not going to scare you actually, but you must face the market realities, and we all here to understand the realities. Okay. The reality here is you must always imagine what's going to happen to your money if you were wrong many times with your trading decisions, and this is why you, as I told you already, this is why you place stop loss orders. Um, Another fact is not all trading signals could be profitable, and obviously this is exactly what you see every time you actually lose money in your trading. Well, at the same time, everybody knows that you can have actually just winning trades, and you must actually losing trades sometimes. And even top traders have some losing trades, but What top traders doing every day is a bit different from what newbie and beginner traders doing. Well, top traders know well how to confirm the trading signals and how to actually convince themselves to avoid those bad signals that can be seen many times a day. And this is exactly what I want to talk about today. Um, I want to show you here some techniques that can be used to actually minimize the number of trades you regret in turn. Well, these techniques that I'm going to talk about are very, very actually simple, and you know it all. But but I was, I want to actually make some emphasize and actually remind you of the importance of these techniques, these very simple techniques. Well, um, actually, um, as I described in the actual title of this webinar, we should catch redfish of the pool and not saying yes to everything come out of the pool, like, for example, your gardener's shoes. Well, so to do so, actually, to being able doing so, to being able recognizing and identifying the best trading signal, we always need to consider some great tools, actually as confirmation, because and that means we should not actually take any trades until we have that confirmation. These confirming tools actually could be a simple trend line on price candles, like everybody knows how to draw actually a trend line, like just here. It's very simple, isn't it? Yeah, a trend line actually can be used as a very, very easy and simple confirmation, but it's very effective, and you gotta believe that. Well, draw another tools like we can draw some trend line, like as you can see here on the oscillators, like the RSI. We can use some trend line to confirm the trend and the direction that we are just heading, and also we can use moving averages, very simple moving average that most of you know about very good. And also we can use Bollinger Bands, a divergence actually pattern, and also the overbought and oversold areas that you also know about, that normally happen every day, almost every day on the charts and on oscillators. Well, even a simple higher low, like let me see, yeah, a simple higher low, as you can see, like here, and also here, a higher low, uh, can tell us that actually tells us that this is not the right trading signals that you're picking, and you have to be very careful about these signs and hints. The signs and hints and technical analysis don't lie. They are based on, reality, and they are based on, the tools that all top traders just doing and analyzing every day. So we have to consider, and these actually techniques and these tools are very simple. Please don't laugh at me, but you must consider that these simple tools always works. So it's very easy. I want to remind you of some of these techniques that actually can be very helpful in your trading. Well, for example, here, let me just pick the chart. That's fine. This is the Loonie, actually the 1 hour chart, and I just drew and put some confirmation tools like moving averages, like two oscillators, and this is because I'm gonna show you step by step how we can use each of these actually tools to confirm the trades. Well, let me see what we have here. Okay. Let me see. Okay. First, the first technique that I'm going to talk about is a very simple trend line that everybody knows how to draw it. You know, we have here a simple trend line. First, I want to double check. Do you have my chart and everything? Do you have my chart and everything? Can you see everything on my chart? Somebody said yes. Okay. Yes. 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 Okay. So let's get back to business. Well, the simple trend lines, as you know, are consist of two high, recent high or recent lows that connected with it actually straight line, like just what we see here. And also we can be more specific and precise with actually connecting the recent high with the actually uh, last last high that we actually pointed before. Well, these two lines are trend lines, and we have a major trend line, and also we can we can actually consider the minor trend lines that actually comes along and walk with the price. Well, how we can actually confirm our trades using these trend lines? Well, it's very simple. Look, um, so just actually imagine we have an stochastic, actually, an stochastic with 13, 3, and 5 in setup, and we're gonna actually trade buy and sell based on the crossovers between D% and K% lines, like as you can see here. Let me just zoom it out a little, scope it. Well, as you can see here, we suppose that we have two lines, a blue line and actually a red line is stochastic, and we're gonna trade based on the crossovers. As you can see, we have crossovers between red and blue. So this is the base trading signals. Actually, this is the base trading system or a trading strategy. But we want to actually filter some bad trading signals and just get in the market when we have a clear and very accurate trading signal. Well, in this case, as you can see here, we had a trend line right here. We also had a correctional or more precise trend line here. And as we can see here, we have the price just breach and surpasses the trend line, the downtrend line, and now we actually suppose that the market is just going to go higher. So in this point, when we have a breakout of the actually trend line, we also we can consider this one, this trend line, because it's most recent, so we can depend on and we can rely on this trend line. Well, as you can see, we had a breakout, we had a very small pullback, and again, so at this point we have a reversal. Actually, we had a downtrend, a bearish trend, but now the bearish trend just actually breached, and we now have an uptrend. Well, in this case, as you can see, we can just connect 2 points, as you can see here, just 2 points, this point and this point, to have an initial actually trend line. Well, this will help us to know that the market is just going higher or going to reverse again. Well, this is not enough to have a trend line, but the trend line helps us to know that if we are on the right direction or against the price. Remember, we can't just risk our money, our hard-earned money, with trading against the trend. So whenever we actually draw the trend line, we have to actually put our orders and trades just alongside and in the not opposite to the current and underlying trend line. Well, this is very simple trend line, and we have a buy signal here, and it's not bad at all because we're not against the trend. So this is the simple actually conception and simple technique that we can consider always with our trading. Well, Then we have also, as you can see, we have the price just, we can just make corrections here because we have recent lows here. And we also have an uptrend, a major uptrend. And this major uptrend tells us that you're not allowed actually. You don't have to make buy trade. Actually, you don't have to go long. You don't have to go short because the major trend line is just uptrend, and the dominant trend is uptrend. So you don't have to risk your money with placing trades and orders against the major trend, which is up here. Well, I hope you understand what I mean, and I think you know that we don't actually have to sell right here. If you have a trading signal, like we suppose that we use a stochastic crossover. Well, we have a crossover here, and also this is it's an actually overbought. So we always know that the an overbought and crossover signals tells us that you can sell, you can go short. But this time, because we have an uptrend, we don't actually trade go short, and this is very risky. And comparing to the long trade, this is nothing. This is actually a very short distance, and you can't just risk your money because of this very short distance. Well, uh, let's imagine we had a crossover again here. We had an overbought, almost oversold area here because the stochastic actually touches the 20 level of stochastic. So this is a very good point for buying. Why? Because we have an uptrend, which actually pointed and determined by actually drawing a trend line. We have an uptrend here, and we also have a buy signal right here. And also we have some other indicators that confirm this actually trading signals. So simply, we don't have to we should not actually trade against the trend. And so the major trend is up here, and I personally don't risk my money on trade on actually these counter trades. Well, let's suppose we have, get back to stochastic. Let's suppose we have crossover here between D% and K% of lines of stochastic. Well, these signal actually comply and are agree with the dominant trend, which is an uptrend. Well, this is very, very, uh, stressless actually. You can trade here very relaxed because you're with the trend, and it's very, very unlikely to actually lose that to have a losing trade right here because we are on the right direction. Well, the other sign here in the trend lines is that when we see the price just touches the trend line, as you can see just here. Look, we have the price just pull back here and touches the actually uptrend line. So this is another sign that we can rely on a buy signal right around here. Okay, we just don't talk about other technical indicators like moving average here, but at the end of session and webinar, I will actually summarize the tools and tell you how to combine these actual tools together to have better results. Well, so let me just see if we have another uptrend. So as you can see here, we also have another uptrend here. I want to ask you, do you prefer to buy this distance for this distance, or sell and risk your money for this short distance? Of course, this is very, this is more comfortable. you can be very comfortable with these trades, with these long trades, because the major trend is up, and also we can buy and go long whenever we have a crossover, a buy crossover, and an oversold area in the stochastic. It's very simple. But this is not what I'm gonna tell you actually. Uh, I'm talking about the trend lines because I wanna actually talk about another one, which is a dynamic support or resistance, or a dynamic tool like moving average. Okay, we actually clean off this off the screen. Let me just delete it. Okay. Um, the second technique that we can use as a confirmation tool is to actually use one or two moving averages. Well, for short-term traders, I want to actually show them how to avoid side trend or range-bound trends and just stay in the trending market. Actually, the trending market has more potential to actually give you some winning trades. So we always looking for trend, and this is my idea because side trading or range trading has no actual profit and potential, but there are too much of risk. You know, we can risk our money because of these very small distance or pips. So if you consider, if you want to, I'm going to talk about with short-term traders actually. Short-term traders can use two very simple, um, okay, two very simple moving averages. Like I can propose, I can recommend using a 21 exponential moving average beside a 34 exponential moving average. These two indicators can work alongside with the price and has a very sensitive, actually sensitive behavior here. As you can see, when we have these two, the black and blue moving averages, when we have these two moving averages just going side, uh, we realize that the market is not going to trend, and the market is just side, you know, just moving in a side or a range, actually a range bound market. So we can actually use trend line or any other trend indicators in actually in such situation because we have a side trend. Well, another hint is where we have the 21 exponential moving average crossing over the 34 and just going higher. This is a very easy and clear signal that we are in an uptrend. It may not be actually a major trend, but actually we can count on as a minor uptrend. As you can see right here, we have two moving averages just stick together and just moving in a very actually horizontal fashion. So we can't actually consider these kind of, you know, seen as an uptrend or a downtrend. So we can just avoid trading signals that happens in these areas. The short term. Let me just delete these two indicators because it's very, you know, annoying. Okay. We also have here, as you can see, when we see these two moving averages just stick together and have no obvious trend, you know, we don't have a short actually downtrend, we don't have an uptrend. This is more likely a side or range trade. So in a range trend, as you know, we can use a very simple oscillator to sell actually in overbought and to buy in oversold. But I won't recommend this kind of strategy because it takes more, you know, much risk rather than the profit that you're gonna take. Well, we also can consider uh, the trending market, like here, as we can see, the 20 moving average, when the 21 moving average is going higher and crossing over the 34, we can count on buying signals. And but in this case, we don't have any. We have an overbought here, and also a buying signal, a buying signal here that we can count on and just going by, but it's a little risky because the trend is just started actually a few many hours ago. So we can't just count on a wave that is just moving at its end. Well, um, well, this is very good and simple tool for short-term trader to have actually two exponential moving averages to know what the current situation of the market is. Actually, when we have these two moving averages together, stuck together, and when we see that these two moving averages has no obvious trending fashion, like as we can see here, we see very narrowed moving averages as you can see here, and also we can see the extension and just when we see these two moving averages converge from each other, so and also have an obvious uptrend here, then this will make us believe that the current price is just going to go higher. Okay. Um, well, the other thing that method or technique that I'm going to talk about is to use actually two actually longer moving averages like 144 exponential moving average as the midterm support or resistance or the trend line even, and also a 233 exponential moving average for actually long-term support and resistance, and also the long-term trend. Okay, as you can see here, long-term traders like position traders and also some swing traders can use these two long moving averages to know if we are in a side trend. As you can see here, when we see the moving averages just going in a horizontal fashion, then it is a side, or actually better to say, it's not good for trading. But when we have a clear uptrend, like just here, when we see a clear uptrend, these two moving averages going upward and has a very clear positive actually angle, so we can count on buy trades and long trades and don't actually trade the short signal. Well, in this case, we can simply just go buy here. If you don't consider the stochastic, we can just go buy here and also here. Why? Because we have an uptrend and also we have the crossover here. The price just breaks out of moving averages, so we have an uptrend. We don't risk our money. Remember, we don't risk our money to trade against the major trend. This is very risky because no one can guarantee that the price is just going to go higher. It may be it may easily just go reverse and just go rebound back very quickly. Well, okay, let me just explain a little bit about the other techniques. Well, let's suppose we have too many signals here. Let me just okay, see what we have here. Okay, we also let me suppose let us just imagine we have many trading signals we discussed already with stochastic, for example, and also the RSI. So what we can do with these too many, this is too many signals, trading signals, but what we can do, what signal we have to follow and go in the market based on, and uh, what kind of actual signals we have to ignore and not actually trading based on. Well, this is very simple in with the help of some trend lines actually that we can draw on the technical indicators. Well, the RSI is my favorite oscillator because we can easily draw some lines, trend lines on it, and it also it also is very accurate, and we can rely on very easily. Well, let's see what we have here. As we discussed at the first of actually the beginning of the session, we have a downtrend here. Okay. We also have, for example, if 21, because I'm a short-term trader, so I try to use these two, I'm sorry, these two actually moving averages to know if the price is just going downtrend or in a side actually fashion or side market. Well, uh, very easily we can see that the market is just going down in this area. In this area, we know that the market is going down because we had support. We had a very nice support here that just has broken here, and also we had the moving averages that tells us that the market is just going down. These two moving averages is going to converge from each other and just going to be a negative, actually has a negative um, angle. So this is obviously a downtrend. So in this actually situation, we can actually also have a trend line on indicators like oscillators like RSI. Okay, as you can see, we need actually also 2 points to connect to each other with a direct and a straight line. This is the same as we do every day on the price chart. Look, we have two actually dips here. We have two lows here, and we can connect these 2 points, as you can see here, this point and this point. Okay. Um, when we have a breakout of the lower support line, and also we have the lower, actually a a bearish trend or a downtrend. So this is very clear that we have to get in a short trade or we have to sell here, right here. And what we can do to confirm that we are on the right direction of the market. This is very clear. When we have an oscillator like RSI that I'm using a 21-day period, um, we can draw a trend line on the actually RSI and wait for a breakout. It's very simple. This is the breakout point for the RSI line, and therefore we can just get in the market in this area. And this is very, sure, and this is very probable, and it's very likely to actually make us some money. So we also can exit the market confirming with the same tool. Actually, we can just draw another line, and when we have a breakout from downtrend that we already just get in the market, we can just exit when we have the price of the value of the RSI just breach the downtrend trend line that we drew already. Well, this is very easy. We have the same, actually, the same rules for uptrend and downtrend. We also have, as you can see here, a major uptrend and also the minor trend lines. Look, it's very simple. Look. Okay. So this is tells us that if I buy here based on this uptrend, and if we can consider this an uptrend, this is very simple. We have actually, let me just cut it a little. Okay, we have a major downtrend here that we can draw based on two actually more obvious highs. And as you can see, we can connect these 3 points because these 3 points, or even these 3 points, because these 3 points are the major actually points that the price has just fell very quickly, and this is the trigger point. Well, so we can consider this line as a downtrend line, and which is actually, as you can see, in accordance and is actually agree with the trend line on the price chart. Well, the downtrend, as you can see here, is down here. Okay, so we have to sell. Just we don't have to just actually buy, and we are allowed to sell because we don't have to risk our money. And as you can see, we also have another sell right here. Is this a sell? Of course not. Why? Because we have a side trend. Because we have a side trend right here. Oh, I'm sorry. Because we had sorry, I just ruined the chart. Okay, let me just adjust it a little. I just put 20, I put an equal distance to have actually more extent in the a more wider actually RSI. Okay, I'm sorry, we have a 50 line. Okay, well, we were talking about a downtrend here. We're talking about the downtrend here, and as I said, we can just go buy here when we have a downtrend line here, and when the trend line just breached right here, we can't go buy. Why? We can't go buy. Why? Because the major trend is just down, and we don't actually the main support or the major support actually does not breach yet. So we have to wait a little and to see if the major support is going to breach here or not. Well, as we wait and see the market, we have a minor uptrend here, uptrend line. When we have the bridge of this uptrend, this very minor uptrend, we have a breakout that actually tells us that everything is going to fine and all right, and you can just go short here because we are with the major trend and not against it. So this is very simple, and I don't want to explain further this because it's gonna be boring. Well, also sometimes we see that some people just working based on a reversal. Actually, they used to make prediction and forecast, and they say, well, the price is not going to go any lower, and the price is just going to reverse. So this is the prediction I'm not agree with. But when somebody do this based on the simple actually tools like trendline, we can also consider some higher low, very simple higher low and higher low pattern here, and also we can see it on the same at the same time on the oscillator. We can see it on the oscillator, as you can see here and here. Well, this is a confirmation, and this is makes us be very, more relaxed to go buy here. I personally don't buy here because the major trend is not actually changed here, and I'm not sure about the future market. I'm just waiting for a trend to be actually to settle down and to be very clear, and then I trade with the trend with the trend and not against it. Well, so we had we I just talked about very easy and simple tools like moving averages, like let me see, moving averages, and also we we have talked about okay, the major trend that the longer moving averages tells us the market is just indeed is going higher. We can just go short and okay. Okay, let me see what we have here on the posts, and we'll see what you just say. Okay, where do redfish fit into today's trading? Well. The redfish is actually when you trade, because I so actually witnessed many times that even top traders do trade against the trade. This is very, important. You can't just go sell or short here. Why? Because this is not the redfish. This is my gardener shoes. You have to be always in comply and agree with the major trend line. And also, uh, these techniques, you may have some other techniques that can help you to actually organize your confirmation, but always remember all confirmation techniques must be actually should be um, technical, because I have some friends that tells me that, well, the price is just going to break the downtrend, and also we have a good news from the fundamental calendar. So this is not going to be, all right. So you have to always consider technical tools, and don't ever trade against the trend. Um, in the long run, if you trade these actually trades, you can just have some couple of winning trades. But in the long run, you don't actually you can actually be successful, and you can have uh, uh, actually win more winning trades. And this is proof. So many friends that lost many things, all everything, based on because they didn't actually realize, and they didn't know how to actually identify a trend and a side trend, and always they trade based on forecasts. You know what I mean? Okay. Well, I think we have to wrap it up. We sorry we couldn't actually uh, talk about. I had many items to talk about, but we have short time, and so I think I hope we see you again on the same webinar, and next or 2 weeks later, I'm going to talk about stop losses, but not the stop loss itself, but I'm going to talk about the ways we can determine and actually identify the best and exact points for stop losses. How we can, recognize best points for our stop losses. Is it going to be a 50 or 40 or 20? What's gonna be? And I'm going to talk about it more precisely in this session, as you can see the link here. And also you can see my website that I and some of my expert colleagues decided to actually launch an independent website, which is actually I'm going to write it down here. You also can actually forward your questions to my email address, which is actually let me just see. Okay, this is my email address. If you want to have more, conversation on about confirmation and my trading signals, because this is not my trading signal. This is the pure technical analysis. I personally use another chart. It's very close to what we talked about today, but a little bit different, and tells us very easily where we have to um, filter bad trades, bad trading signals, and good trading signals. So I'm going to explain later if you call me and actually uh, if you just contact me through the email, I will discuss and explain about my settings and I will discuss about the confirmation system that I used to actually use it in my daily trading life. Well, okay. I think we have to wrap it up, and thank you for being here today. And sorry if we can just, make more actually talks and more actually explanation. I'm not a good speaker, but I'm good in trading, as far as I know. So if you just contact me and make me an email, so I'll be very happy to discuss your uh, possible problems or questions actually. Well, please don't forget to see my website and also forward your actually questions to me.